Rodney and Travis, founders of SoLoFund. And I know we have a short period of time and an amazing company, so I have no idea how we're going to push the learnings in here. And former winners of this competition. So let's jump right in. I mean, I met you guys when you were super early, and now you're, making millions of dollars a year. So give us a little hint, both in terms of where SoLoFund started. You don't have to go into your why, but your SoLoFund started, and how you got from there to here.
Yeah. Well, hello everyone. Rodney Williams, obviously co-founder alongside Travis. I like to say our simple start story. We both had this pain point amongst our friends and family, needing access to capital. It was $50 for gas. It was $200 for a utility bill. When we started to dive in deeper into that problem, it was a much bigger problem than we ever imagined, and that was the premise for Solo. Travis then made his way across the United States, starting out originally in New York City, made his way to Columbus, Ohio, in an accelerator, to then Cincinnati, Ohio, to then Kansas City,
Techstars.
then to Los Angeles. And it's been obviously a long, long journey. Today, we started out. It's all about like loans funded, how many people we're going to help. Today, we are helping over 50,000 people a month. We do about 20,000 loans a month. We've surpassed what everyone thought. Yeah, we can clap up for that. Thank you.
Yes. So Travis, tell me, what is that trajectory going to look like in the next year?
I mean, it's been like consistent 20 to 30% month over month growth for like almost 2 years. We are one of the fastest growing fintechs that most people have never heard of. I think that'll change this year. We're starting to, market a little bit more openly and forcefully, both on radio, and you'll start seeing some TV later this year. But, the organic halo of this business and really solving a need that so many people have, 80% of our country in 2020 was waiting on $600 from the government, right? Food insecurity lines, miles long. And we knew that this was a problem much before, COVID was a household name, and people need access to capital. And by solving that need, it's only become more and more prevalent, how important the small dollar capital is. And, for people who are actively looking for yield, I mean, obviously we know some of the names, the Robinhoods, the Coinbases, et cetera. We've known people were actively looking for yield for just as long as them, right? We just weren't building this business yet. But what we've been able to provide is industry leading return, and that's been growing the business. And that's where we don't see any slow up. We only see ourselves continuing to fund more loans. And while our loans are definitely smaller in size, what I will say is that we're doing 3 to 4 times the amount of loans that like a lending club is funding. And we're doing 3 to 4 times what they're doing on a monthly basis. So we're doing in a month 3 to 4 times what they're actually doing on a year. That's incredible. No one thought that we would get here, and it's really exciting to prove some people wrong.
So, question for you: there's been a lot of talk about product market fit today, and we have lots of startups here. So, you guys struggled to raise money. B, I think also struggled to get to the trajectory that you are today. Can you talk about what were some of those lessons of things that you were outsourcing, that you realized that you had to insource, et cetera, that helped you turn that corner that you can suddenly put the gas on?
We'll both take this one. I can start. We shouldn't have had to get to the trajectory that we are today to raise the amount of capital that we have. That's the plight of having this skin color, and I'll just be honest. And it's been really frustrating. I'll tell you that some of our counterparts who are in the space would have raised hundreds of millions of dollars with the amount of traction that we have, right? We've been doing over a month. We're over $1 million a month in revenue, but if you look at Coinbase, we've only raised $15 million. That's not necessarily common. With that said, we're really excited about, the continued trajectory of the business, but, that's been the real root of it, right? Like, I think we would be 10 times bigger if we would have got the early support from investors. Rodney, I'll let you take.
And with that said, though, I think the lack of capitalization created a significantly more sound business. we were forced to think about unit economics significantly earlier in the company's trajectory. The example that is being mentioned is an example where it's a two-sided marketplace essentially. There's individual lenders on one side and individual borrowers on one side, and we're providing. When you think about to make that happen, you have to underwrite really, really accurately. You have to be able to recover delinquent loans, and then you have to protect the marketplace. At one point in time, we probably were outsourcing pieces of all of that. Eventually, we had to bring that all in house. So we had to bring an underwriting model that was really intelligent and learned via AI models and things like that. We had to bring a recovery process that has to perform better than any other recovery company in the world. And then obviously we had to protect the marketplace. Think about a guarantee that you would see on StockX to make sure your shoe is the right shoe, right? It's those type of protection. And those things are what we brought in house, built it all proprietary, and relaunched the platform. Literally less than 10 employees at the top of 2019, 2020. Sorry, 2020, and essentially that's when everything took off for us. So definitely a struggle. I would say we're challenged because the founders we are. We're challenged because lending isn't in all everyone's thesis. We don't use any buzzwords. I hate buzzwords, blockchain, DeFi, or any type of AI. Like you have to talk to us after about 20 minutes before we start talking about those things. But the reality is like we focused on unit economics and tried to prove everything wrong. We knew that we can grow. We knew that we had real product market fit regardless of the unit economics.
So what's the plan? You're in the U.S. Is there an opportunity to go elsewhere? Two questions. What's the plan? Is my first question, and then the second one is, Jesse Williams was in here earlier talking about at Flybridge talking about community. What does community mean to your lenders?
So I'll actually start with the latter. I'll start with community first, and then that'll kind of lead to global expansion. Community for us, right? We built a platform off of what we call the power of financial collaboration. We always felt like people who had discretionary capital would be able to deploy it, earn significant returns, but also help people who need access to small dollar loans not be forced to either go to friends and family, which was the pain point Rodney and I originally felt, or they wouldn't have to go take traditional payday or title loans, which if you have any knowledge of that industry, it's quite predatory. So by allowing the profits that are actually made in our platform to go back to everyday regular people, we were really building a community. And when you think about things such as we match loans amongst complete strangers on an average of 28 minutes. That's the equivalent of your car breaking down on the side of the road. You post a loan as a borrower with your own terms, and then some stranger decides that they're going to help you fix your car. Before the tow truck pulls up, some stranger is giving you money. Like that's community. And when that happens, it's a really delightful experience for the borrower who gets their funds, but it's also a much more delightful experience when that stranger actually pays you back as a lender. And when those two things happen, people will then go tell other people, and that's where the flywheel happens. Very similar to the way that we use Uber all the time as an example. You'd press the button, some stranger came and said, I'm willing to take you wherever you want to go. When you would go tell someone else about that experience, some people became drivers, some people became riders. And that's really, really powerful from a growth perspective. From a expansion perspective, we wanted to have an impact. And impact doesn't just mean that a kid in the South Bronx is able to eat because his mother was able to put food on the table from a loan from Solo. It's the same impact that we want to have for a little kid in Nigeria or for someone who's, in Guatemala. So with that said, we do have a plan to launch in at least one global market later this year. We're determining exactly where that will be, so I won't spoil anything just yet. But we do know that, if you think about the economics of the world, there's a ton of countries that have growing middle class that is actively looking for yield, and there's a limited number of opportunity. Very kind of dissimilar to America, where we have a shrinking middle class and growing working class. But these people actively looking for yield, we're able to provide them with a return that they just can't get anywhere else.
The only thing I would add to from a vision standpoint, we started out as this marketplace, and it's attracted and created a great wedge for other financial services. So within a few weeks, we will be opening up consumer deposit accounts to all of our users. Actually, all of our users are actually built on a banking infrastructure. So we actually have over nearly 400,000 consumer deposit accounts. Once we actually make that live, we will be the largest challenger bank for underrepresented communities, but as well as everyday Americans. So, thanks.
So, what advice do you have for the people in the room who have been toiling away at their company for the last year or two, are able to scrape together a little bit of money, but need to raise and are hitting walls? I mean, you've been there. How do you manage your psyche through that? I think is the first question. And what do you think helped you get over the hump?
You should be a little bit excited that you know something that everyone else doesn't know yet. Um, if you use the no's as just power to take you to the next level, like for me, I don't internalize the word no. It'll frustrate me a little bit at times when you think someone gets it or they're supposed to get it and they don't. But if you don't internalize it and you just use the no as a not yet, it'll get you through some of those difficult times. I do think that has been the story of Solo. We've got a lot of no's, and we just get more resourceful. We figure out other ways, right? We couldn't go get a debt instrument, so we launched an insurance platform to guarantee loans ourselves with our own cash flow. Like, it's painful, but we figured it out. And when we figured it out, everyone is just like, "Wow!" Like, wait, like, what's the debt instrument behind this insurance program that you guys have? Wait, you guys do this yourself? How did you figure that out? But when your back's against the wall, you have to figure it out, right? You have to figure out how to make these things work. So, for us, my only advice would just be, again, don't take a no as a not yet, because when you start putting numbers on the board, people start to wake up.
Yeah, I'm sure a few VCs had some personal bets that we were going to die. Um, I'm positive.
No, when we go back and we're just like, hey, here's the update, they're like, you guys are still around? Like, it's like crazy.
Yeah, I mean, there was times where we were in 2020 that we're talking to investors and we're literally raising for the payroll. We were raising for the payroll next week, and then we would get that, and then we would raise another $100,000 for the payroll, and then we did that like 6 times. Christmas sucked last 2019. It didn't. It was okay, but you can imagine it was uncomfortable. So yeah,
We never missed a payroll, though.
we never missed a payroll. That is accurate.
Never missed a payroll.
Yeah, double down, focus, execute. You know something that they don't. They're actually not that bright. You're going to be the bright one. So
Yeah. And do,
And we personally funded payroll a couple times before it got too big.
no, that's I mean, hard lesson, but I think it's a great example of the resilience that, this team had and your ability to, when you're struggling like that, you guys did better than anybody else at bringing on talent. Tell me how you did that.
I would tell you that our team today is a strong correlation to like the mission of the business. What we were selling was mission and vision. We could not compete with LA startups and San Francisco startups who, had raised significantly more money than us. We couldn't, compete with the big guys who all of a sudden post pandemic were just paying people insane amounts of money. I had an engineer leave our team. He's making like a $500,000 a year at some really, really, really big company. No way that we can compete with that. But for everyone else who's largely there, they're bought into the mission, right? They wanna build a community that empowers financial collaboration for all, financial autonomy for all, and that's what keeps them there, right? All of them have people on LinkedIn trying to poach them and offering them more money than we can offer them, but they're really bought into to the mission.
be true. Our head of engineering was the former U.S. head of engineering for TransferWise and Wise. He saw us making a plea to the U.S. Congress, the Financial Committee of Financial Inclusion. He saw us there. He reached out on the LinkedIn, and he basically a year before he joined said, "This is the company I want to be a part of." Right. So those are the things. We're attracting talent not because of anything else.
I want to thank you guys for all your work. I couldn't be more proud.
Thank you, Lisa. We are so excited to have you as a continued supporter.
Yeah. Well, thank you. And I know Startup of the Year Summit is happy to have you back and are happy to be on your cap table. So thank you.